This man is Gautam Adani. He may not be a household name, but Gautam Adani is the billionaire founder of the Adani Group, which is a massive conglomerate in India. And when I say massive, I mean it. The Adani Group spans a wide variety of businesses, such as operating ports, power generation, mining, airport operations, food processing, infrastructure, and much more. And just 1 month ago, Gautam Adani was the richest person in all of Asia, and even the third richest person in the world, with a net worth of nearly $150 billion. The key word in that sentence, though, is was. Now Gautam Adani and his company have been implicated in fraud accusations that have wiped out over $100 billion from the Adani Group conglomerate of companies. It all started back on January 24th, when a short seller and research firm called Hindenburg Research sent out a cryptic tweet saying that, quote, "Soon we will release a report on what we strongly suspect to be the largest corporate fraud in history." Shortly after this initial tweet, Hindenburg released a bombshell report accusing the Adani Group of, quote, "pulling the largest con in corporate history," unquote, through an elaborate scheme involving stock manipulation and accounting fraud. At the center of the claims were allegations that the Adani Group used offshore shell companies and funds that were owned by the Adani family to secretly buy and manipulate their own stocks. The report alleges that these offshore companies and funds are some of the largest supposedly public holders of Adani stocks, which is an issue that would subject the Adani companies to delisting as per Indian stock market rules. These shell entities were also heavily associated with Gautam Adani's older brother, Vinod Adani, which also raised significant concerns. Most of these shell entities have, quote, "no obvious signs of operations, including no reported employees, no independent addresses or phone numbers, and no meaningful online presence." Despite this, they've collectively moved billions of dollars into Indian Adani publicly listed and private entities, often without required disclosure of the related party nature of the deals. End quote. Basically, the oversimplified explanation is that Hindenburg is alleging that the Adani Group boosted its stock price by manipulating its stock through channels that it secretly influenced and controlled, with many of them being associated with the Adani family. These connections to the shell companies were not publicly disclosed by the Adani Group, because having so much of the company controlled by insiders would subject Adani's companies to delisting by law, since there would not be enough shares in the float to meet Indian securities requirements designed to mitigate stock manipulation. Right to information requests that Hindenburg filed with the Securities and Exchange Board of India also confirm that these offshore funds are the subject of an ongoing investigation by the board. Hindenburg also alleges that these shell entities are used for earnings manipulation. The report notes that there were, quote, "a series of transactions where assets were transferred from a subsidiary of listed Adani Enterprises to a private Singaporean entity controlled by Vinod Adani, without disclosure of the related party nature of these deals. Once on the books of the private entity, the assets were almost immediately impaired, likely helping the public entity avoid a material write-down and negative impact to net income." In simpler terms, impairment charges are when there is a permanent value reduction in a company's asset due to things like a change in legal or economic conditions, a change in consumer demand, or damage that impacts an asset. This sudden decrease in the value of the asset has to be recorded on the books, which causes what's called an impairment charge, which can lower company net income. Hindenburg is alleging that the Adani Group uses shell companies to artificially boost their earnings by selling these impaired assets to the Vinod Adani-controlled shell companies at their original price, and then having the shell company record the impairment charge instead. This lets the publicly traded Adani companies avoid impairment charges on their earnings reports by transferring the loss to the offshore shell company instead. Within days of these allegations, the Adani Group's flagship stock, Adani Enterprises, lost over 50% of its value and wiped out $100 billion in market cap as investors feared the worst about the fraud claims. And to be perfectly honest, the circumstances surrounding Adani's stock rise were more than a little suspicious looking in the first place. And I think this is a major reason why the fraud allegations were especially damaging and cut the stock's value in half. If you look at a chart of the company's flagship stock, you can see that Adani Enterprises stock went parabolic in the last 3 years without looking back. In fact, it posted a 1,398% gain in those 3 years, and many other Adani Group stocks posted similar eye-popping percentage gains during that time. The meteoric rise of their stocks to become one of India's top conglomerates in such a short amount of time does look a little suspicious. And that's without even looking at the valuation concerns that the Hindenburg Research report pointed out. Another core argument in the short report was the unusually high valuations of the Adani Group's companies. Traditionally, infrastructure companies like Adani's have relatively low price-to-earnings ratios, as they are relatively low-growth, stable businesses. The industry average price-to-earnings ratio for most of these companies is in the 20s, but the Adani companies perplexingly had been trading with ratios that were well into the hundreds. For context, Hindenburg pointed out that these valuations were, quote, comparable to the frothiest of high-growth tech companies, unquote. But the big difference is that these Adani companies did not have either the high growth or the tech to even argue for a valuation like that. The valuations of these Adani companies look like massively inflated bubbles, and it's frankly suspicious looking that they even got to that point. To make things even more puzzling, a lot of the Adani companies actually have negative free cash flow, meaning that many of the companies don't even generate enough cash on their own to cover cash outflows and maintain business operations. With the short report and fraud allegations combined with Hindenburg's past track record for exposing fraud, the market panicked, and Adani stocks crashed. Adani would have to act quickly to address the allegations in order to try and calm the markets and defend the company. And that's just what the Adani Group would attempt to do. On January 29th, Adani Group hit back with a massive 413-page reply to the Hindenburg short report. In their lengthy response, they characterized the Hindenburg Report's claims as being baseless and misleading attacks from the, quote, Madoffs of Manhattan, unquote, and they even claimed that the fraud allegations were an attack on India itself. The Adani Group also said that it would be exploring pursuing legal action against Hindenburg for the short report. But Adani's reply to the allegations actually ended up making things worse for the company, as the stock continued to crash in the coming days. Hindenburg Research responded to the Adani Group's rebuttal just hours later, saying that the report only included around 30 pages in the 413-page document that even focused on the claims that Hindenburg made in their short report. Hindenburg said in their response that, quote, Adani failed to specifically answer 62 of our 88 questions. Of the questions it did answer, the group largely confirmed or attempted to sidestep our findings, end quote. Hindenburg also said that the allegations relating to the offshore entities controlled by Guatam Adani's brother were not disputed at all by the report. Instead, quote, Adani bizarrely argued that Vinod Adani is not a related party to the Adani Group and that there are no disclosable conflicts related to the transactions that have collectively moved billions of US dollars through Adani Group entities, largely through offshore shell entities, end quote. Hindenburg also slammed the Adani Group for trying to distract from the allegations, saying that the rebuttals, quote, also predictably tried to lead the focus away from substantive issues and instead stoked a nationalist narrative, claiming our report amounted to a calculated attack on India. In short, the Adani Group has attempted to conflate its meteoric rise and the wealth of its chairman, Gautam Adani, with the success of India itself. We disagree. To be clear, we believe India is a vibrant democracy and an emerging superpower with an exciting future. We also believe India's future is being held back by the Adani Group, which has draped itself in the Indian flag while systematically looting the nation. We also believe that fraud is fraud, even when it's perpetrated by one of the wealthiest individuals in the world. End quote. It's pretty clear that the market ended up agreeing with Hindenburg, as Adani stocks continued to crash. The fallout for the Adani Group has been immense, as not only has the company's stock plummeted the past several weeks, but the report forced the company to cancel a $2.5 billion deal to sell new shares in Adani Enterprises stock just a day after it had secured full funding for its $2.5 billion follow-on public offering, which was very unusual. Forbes notes that, quote, minutes before the Adani Group announced it had canceled its offering, Forbes reported that two companies with alleged ties to Adani, Alara Capital and Monarch Net Worth Capital, were underwriters for the transaction, raising questions about whether Adani Group principals had purchased shares in the offering. The Adani Group has not responded to Forbes' request for comment. End quote. The suspicious timing of the canceled share offering has raised the question about whether these affiliated entities were set to purchase shares in the offering. The famous investor Bill Ackman even took to Twitter to say that he wouldn't find it surprising if the Adani offering was rigged with affiliated buyers. The problems that Hindenburg brought up in its short report on Adani are not exclusively centered around fraud, though. Hindenburg also argues that the debt that the Adani Group has used to fuel its rapid expansion puts the company on a precarious financial footing and exposes it to significant risk. Adani has a total debt of around $24 billion and has borrowed heavily from overseas bonds and foreign and Indian banks. Hindenburg notes that, quote, concerns about the Adani Group's leverage have been expressed by credit sites, a fixed income research firm owned by prestigious financial services firm Fitch Group. A blistering report about Adani Group published in August 2022 had called the group deeply over-leveraged and suggested it could unravel Adani's vast business empire. The report was toned down in September 2022 after credit sites met with the company. In its latest report, credit sites refused to change its investment recommendations and maintained that several of the group companies maintain elevated leverage owing to aggressive expansion plans that are largely debt-funded and that have pressurized their credit metrics and cash flow. End quote. In response to these concerns about Adani's high debt burden, Adani's own corporate bonds have plunged to distressed levels in the wake of the fraud allegations. Major banks like Credit Suisse and Citigroup have already stopped accepting Adani's company bonds as collateral as well. The significant debt concerns also make it unlikely that the company will be able to continue borrowing money to fund projects and acquisitions, as lenders are now much more cautious about lending to the Adani Group. This effectively could put on hold any expansion plans that the company was planning in the near term. Another negative impact for the company is that many institutions are looking to limit their exposure to the Adani Group. The MSCI, a global index provider that investors often use to gain exposure to foreign markets, is set to lower its own exposure to the Adani Group in its indexes in the wake of the fraud allegations against the company. But perhaps the biggest impact for the Adani Group is that India's market regulator has said that it is increasing its scrutiny of Adani Group's deals and foreign portfolio investors. In a filing, the Securities and Exchange Board of India said that it is, quote, inquiring into both the allegations made in the Hindenburg Report as well as the market activity immediately preceding and post the publication of the report to identify violations of SEBI regulations, end quote. Depending on what the investigation finds, Adani could run into problems with the Indian government. But be sure to let me know your thoughts on the Adani fraud allegations and the Hindenburg short report in the comments below. Do you think the accusations are true? Be sure to let me know, and make sure to subscribe to the channel for more finance content. Thanks.